So Bitcoin, it's Wednesday the 24th of May, and we've had a pretty nasty sell-off. When we looked at Bitcoin at the start of the week on this weekly candlestick, we were looking for a break higher that would hold above 27,346, which was basically a support and resistance level, and a back test of this 236 fib. And we said kind of that's where we need to be going if we're going to go higher from here, and that would mean above the daily 20 moving average and out of this sideways range. Well, it hasn't happened. In fact, we failed there. If we take a look at the 4 hour, we've had a very nasty overnight. We've been selling since early yesterday morning. Stock indexes led the way, and now we're here. The problem with this is, and when we were looking at this, if this was a wave 1 and this was a big wave 2, then we really needed another leg higher and this to be like 1 of 3 and really get going, and we haven't. Instead, what we're seeing is really quite nasty selling, and this was a technical ABC. I posted this yesterday on Twitter. This was our ABC, and this was 27,100 was our confirmation support level, and it broke down. So we've got much further to fall here. And what unfortunately this means is it means that this whole rally from the 12th of May low is also choppy, overlapping and corrective. So this is our first swing, this is our third wave, and if we measure them this way, so we measure the first swing, project it from here, the high was exactly where this is 61.8. Now that's very common. I'm always looking for zigzag and corrections, because when they reverse, you're going with the trends. So when we have this ABC and this very common relationship where this second swing is 61.8 of the first swing, it means when we reverse, we're going to continue with the trend, which in this case, of course, with Bitcoin, unfortunately with this year, is lower. And so that means that we are headed now to our next fib support level, which for me is at 25,000. Now let's zoom out and look at the daily and weekly and see where our moving averages are, because 25,000 is the 38.2 retrace from the lows that we made in November 2022, but the 50% and the daily 200 moving average is lower. It's down here at 23,270. And so whilst I think that we should get a reaction at this 25,000 level the first time we tag it, I mean, it's an amazing support and resistance level. If we look back here at the highs that we made, swing high in August 2022, 25,000, you can see it's a big pivot level. It's the neckline, wasn't it, of this big kind of bottoming pattern that everybody was watching. So I think the first time we're going to come back to 25,000, it's one of those levels where we should see a pretty decent bounce, and it's worth putting your toe in. But we need to watch and manage our risk quite carefully, and be careful with your leverage, because there certainly is room for this to head lower and go down to 23,200, and I wouldn't rule it out. So that's where we are. Bear flag breaking down today in Bitcoin. We're seeing the same in ETH. Here's our ABC rally in ETH. Let's take this away. And by that, I mean this is a 4-hour chart of ETH. You can see our first swing here in ETH from this low to high, equal to our second one almost. It got a little bit front run. That's a very common relationship in breakdowns. Now, the first place we're likely to find support in ETH is a retest of these previous lows. That's for all markets. Whenever you sell any breakdown, a retest of previous lows and highs are always where you're going to see some profit taking, and so you would expect it to bounce. But for me, the first support in ETH is lower at 1734, and with this bearish cross of our daily moving averages and the 200 moving average down here closer to the 50% mark from this low to high, but actually lower if I measure it from this whole big ABC in ETH. I think there's room for us to go much lower, 1660, potentially 1511. Now, if I'm wrong about ETH, this was a wave 1, wave 2, and this is a wave 3, then we could potentially look at the 50% of this swing, which would give us a 50% a little bit higher at 1600. So I'm not going to say, all the way, but let's wait and see what happens when we say hi to this 200 moving average again, because you can see in ETH previously this 200 moving average, when we were in the downtrend in November 2022, it was exactly resistance and was support when we pulled back and tested it in March. So yeah, like if we take our more bullish count here in ETH, 1600 I think would be where I would be looking for a bigger buy. But just don't rule out a bounce on a retest of these previous lows and maybe 1732. But for now, everything looks like it's breaking down. Just one thing we should say, the Fed minutes, which are later today, quite often can be a market volatile turning point. And so if this was to be a false breakdown here in ETH, I wouldn't be surprised if that happens on the Fed minutes, and then we could see another leg higher in ETH. I wouldn't rule out that we don't do a bigger leg higher if this becomes a false breakdown. So if we see a big reversal later today, we could see another bigger bounce up to 1889. But if we stay stuck underneath this trend line in ETH, then we're looking lower, 1732 and 1600 from here.